I think that there's a rotation happening in where investors are looking for value. There's a shift occurring in risk tolerance among investors from retail all the way up to institutions, all the way up to central banks. If you look at central bank gold buying activity over the last, 8 years, but over the last quarter specifically, this is skyrocketing. And a more significant trend, I think, that gets talked about less than central bank gold buying is central bank gold repatriating.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, and excited to continue on recapping the year that we've seen in the gold and silver markets. A lot of volatility. We've had some tough times. We've had some happy times where the prices are higher, although certainly a lot that has gone on this year, a lot in the world with the war between Russia and Ukraine, Fed rate hikes, and a lot of other things to keep market participants busy. Certainly no shortage of events this year. So fortunately, to dig into that and a whole lot more in the gold and silver space, I am joined by Jay Martin, who is the host of the Jay Martin Show on YouTube, also the organizer of the Vancouver Resources Investment Conference. So quite well in tune with the things that are going on in the market. And Jay, I remember when I was first getting started doing interviews, catching up with you back in, I guess that was San Francisco a couple of years ago, and nice to finally catch up with you again for an interview. And how's everything going over there?
I remember that. Yeah. And, my pleasure to be here, Chris. Thanks so much for chatting. We're good. Yeah. We're in the final stages of prepping for that event, the Vancouver Resource Investment Conference. That's occupying most of my team and my time right now, but it's looking really good. It's going to be a fun couple of days and looking forward to it.
Well, that's coming up at the end of January, and we'll have a highlight about that at the end. Although, perhaps to prepare us for some of the things that folks will be talking about there, would love to just get your overall feelings on what we've seen in 2022. I mean, some of these things, especially with a war, I don't know that anyone could predict, but thoughts on 2022, whether that matched what you were expecting, whether the volatility was different from what you might have imagined coming, but thoughts on what we've seen this year so far.
It did match what I was expecting, Chris, in the sense that when I was asked in 2021 what I expected over the course of the next year, my answer was always the equivalent of a bit of a shoulder shrug, to say that I just expect the balance of this decade probably to be how the first couple of years of it have been, which is to say unprecedented and unpredictable chaos and volatility. And I kind of felt like the party was just getting started. We're pretty poor at predicting ripple effects. When something big occurs, we tend to judge that event by its immediate impact. And we're much poorer at projecting what could this mean 8, 10, 15 years down the road, which is truthfully, when the real dents are made, and look, kind of like a near-term example of this would be, the FTX Alameda blow up, right? Like, this is something that really happened in June. It just takes a while for these things to reach the surface and for the cracks to appear, right? But this happened when crypto began to collapse, and then all sorts of borrowing left and right had to occur, and eventually this thing came to the surface. But like, kind of a micro example of how black swan events occur. And I didn't predict a war, for sure not. But my expectation was that the volatility party was just getting started. I was operating my portfolio from a place of stability, very heavily weighted on that stable side of the barbell, and just kind of waiting and thinking, I think that there might be a few more black swan events this decade to come. So let's just play it smart and safe and be patient right now.
Yeah, there certainly could be. And again, while war is, in this particular war, perhaps not like anyone predicted it or knew it in advance yet, not entirely shocking, as history shows. When economies start running into trouble, often war is one of the things that pops up. And it seems like we're starting to now finally see a lot of the things that people who have been looking to gold and silver as insurance and protection from money printing, government, debt loads that have just gone insane. I mean, we're not in 1980s or 1990s anymore where people are saying one day these things are going to happen. I mean, it feels like now a lot of the things that people have been warning about are actually playing out. Is that a fair way to put it? Where, we're reaching some point of that, maybe not end game, as you and I were talking about before we started, where life does continue on, and I think humans will continue living, but perhaps in terms of the current financial arrangement, does it seem as if a lot of these things are building and we're now at that point where gold and silver investors have been talking about for a while and been preparing for?
I think we are. I mean, I think that there's a rotation happening in where investors are looking for value. There's a shift occurring in risk tolerance among investors from retail all the way up to institutions, all the way up to central banks. If you look at central bank gold buying activity over the last, 8 years, but over the last quarter specifically, this is skyrocketing. And a more significant trend, I think, that gets talked about less than central bank gold buying is central bank gold repatriating. And countries are recalling their gold reserves back within their borders, specifically countries like Germany, who historically never wanted their gold within their borders because Europe's a continent that always descends into war. That's kind of the history. When you have so many nations sharing a small landmass, of course, conflicts are going to be regular, and they have been, and they're probably always going to be. So it makes sense that a country like Germany would want to own gold, but probably not own it within their borders. But now they're repatriating that metal during a time when there actually is a hot war right next door. Why would they feel better about having their reserves within their borders today than they did over the last decade? It's very telling. And I think we're seeing that trend, through the whole length of the food chain, right? Central banks are reshoring their balance sheets, maybe ditching T-bills in exchange for the historical store of wealth being gold. Why are they doing that? We're seeing similar activity at the commercial level, companies showing up their balance sheets, decreasing G&A and overhead. I mean, Elon Musk is sort of one example. He's kind of providing cover fire for tech entrepreneurs all over the world to execute mass layoffs and trim up their balance sheets and their overhead and their P&Ls, and hopefully get to a place where they're not so dependent on venture capital and capital markets, and to a place of more stability and certainty, right? A bit less exciting, a bit more boring, probably a lot smarter. It's similar to central banks buying gold, right? It's back to sanity, right? It's back to simplicity. And even at the civil level, people like myself, I mean, as I said before we hit record here, I've doubled my physical gold holdings in the last year. And whenever I'm doing something, I've learned that it's not because I'm ahead of the curve. Typically, it's because I'm part of a wave, right? I'm receiving the same inputs that you are, that our viewers are, that people all over the world are. And for some reason, I feel like I want to own more physical right now than I did 2 years ago. Why is that, right? It's because of the inputs I'm getting hit with. It's because I'm part of a trend more than likely. We're also seeing like a trend just in lifestyle, in that the number of people I know in the last 2 years that have given up the downtown condo for a quarter acre in a small town, like there's a massive migration occurring towards simplicity, towards community, right? And all of these things are kind of demonstrations of people's migration towards a simpler life, maybe a more stable way of being. And to me, when it comes to your finances, gold's about as primitive and simple as it gets, right? It's a boring, historic rock that does its job very effectively, and its job is to not do much, and it does that job very well, And I think that it's going to be interesting to see how the paper market responds to this over time. People taking ownership of physical, but yeah, there's a shift in psychology, and that's being demonstrated right now in the purchase of metal, I believe.
Yeah, and like you mentioned, we're seeing that happen on the central bank level in terms of gold purchases hit a record in the third quarter of this year. You mentioned the repatriation. Another thing in there that I think gets mentioned, yet I wonder what the long-term impact will be, is that Russia getting kicked out of the SWIFT system earlier this year, which, gee, if you're another country that doesn't have the best relations with the US, and just seeing how that switch can get flipped, do you think that's something that is still lingering on the minds of a lot of the decision makers for various countries and will have a further impact going forward?
Yeah, I think that's directly related to Q3 gold buying. I think it's the number one catalyst for that. When you're essentially, if you're running a sovereign nation, and US just sent a massive message to the world, said we can confiscate your US dollar reserves if and when we decide you're a bad actor. And how many countries have not been qualified as a bad actor over the last 100 years, right? Like everybody's ticked that box at some point. And so we will probably look back on the confiscation of that 600 billion in US dollar reserves as significant as Nixon taking the US off the gold reserve when we think back on this 10, 20 years down the road and how it changed the trajectory of sovereign balance sheets. I believe so. I don't think it's coincidence at all. I think it's directly related to that event. We confiscate US dollar reserves, send a message to the world that this is no longer a safe store of value, or at least as safe as you thought it was. And now we're seeing this exchange of T-bills for gold, a year later, 6 months later. Like, that's directly related. I would do this. It makes all the sense in the world to me.
Yeah, and it's funny you mentioned Nixon taking us temporarily, of course, off the gold standard, and I'm sure that's coming back any day. Although around that same time, we had the advent of the petrodollar, and that's something that, again, man, you think 10, 20 years ago, if we had seen some of the news stories that are hitting now, where China's setting up their petro yuan, and then China recently going to Saudi Arabia and talking about energy deals, stuff that we used to speculate could happen, yet we're seeing now really an active de-dollarization. I mean, it's really been ramped up, and now countries making infrastructure, so not just thinking about it or speculating about it, but seems like it's actually playing out on the energy level as well, and just finding ways to actually move forward with that, don't you think?
I do, yeah. And remember, this isn't the first time the Chinese went to Saudi Arabia and tried to buy oil for yuan, but prior they were shut down because they didn't own enough gold to support the yuan, and that's changed now. And so, a lot of their motivation to stock up on physical is likely to make deals like this. You can now trust the currency. We have the reserves to support the value, and transactions like this couldn't have occurred prior to, but they can occur now.
Yeah, and again, digging a little deeper into the energy side of it, I know you have a lot of guests on your show who talk about that, and obviously there's the concerns with Europe getting cut off of energy supplies from Russia. I know you had Steve St. Angelo on your show recently who talks about how we've hit an energy cliff here in the US as well. Anything that you could touch on there, and perhaps risks that people should be considering or keeping an eye out for in terms of the energy side of things?
Yeah, I think there's a lot of false narratives being spun around in the energy sector right now. And like, look, it's important to pay attention to trends like the renewable energy shift that we're going to see governments hunt down over the next decade. And for starters, I think we have to acknowledge there's not a lot renewable about the renewable energy industry. If you actually dig into the technology and commodities required to harvest and store, I mean, renewable energy is renewable in the sense that the sun always shines. I agree with that point. But in order to actually harvest and store this, you need an astounding amount of metals, right, to create the batteries and the tech, and then even the components of these mechanisms that capture this energy, the fiberglass, the silicon, the metal alloys, all this stuff. And so to build this out at scale is far from renewable. But that's not going to stop governments from hunting it down and creating massive demand for the commodities required. I just don't know at what point we're going to get to the crossroads where the same voices who are gluing themselves to Picassos and museums protesting the world needs to get off of fossil fuels, are they going to be the same voices that are suddenly saying, and we need to permit every single mine globally in order to get the commodities we need to build? We need the cobalt, the vanadium, the copper, the nickel. We need all these things. So are they going to suddenly change their direction of their protest and say, hey, now it's not going to happen. But nobody thinks through to step two of this transition, right? That's as deep as you have to go to determine that renewable is not renewable. But nobody goes that deep because the loudest voices calling for an end to the fossil fuel economy and the transition to renewable, they're not actually looking for anything except moral virtue points. I mean, that's it, right? If that's all you're looking to score, then don't worry about looking deep into this transition and what it's actually going to take, and is this actually viable in all of this? And a hilarious example of this is when the Chancellor of Germany came to Canada not 3 months ago to beg our Prime Minister Justin Trudeau for a natural gas deal, right? A commodity that they needed to get through this winter. And our Prime Minister, even though we're sitting on massive reserves of natural gas in this country, 1.3 trillion cubic feet, told the Chancellor he couldn't make a sound business case for this deal. It's like, we have the product, they want it. I mean, it's couldn't get more obvious, but instead of pursuing any kind of natural gas agreement, Prime Minister Trudeau promised hydrogen power, something that we don't have in this country and may have by 2050, right? That's as per the Government of Canada website, maybe by 2050, hydrogen power could contribute to our net zero emissions goals. Like, how empty is a promise, right? 30 years down the road for something you don't have today. I mean, it's so ridiculous, but it doesn't matter because we're not looking for anything here except moral virtue points. That's it. And if that's all you're looking to score, then who cares about the economics of anything, right? You can make all kinds of promises. And so I'm looking at the energy sector. The investor room is looking at it, but with a lot of caution because they just see how much of this is just smoke and mirrors, right? And so you can speculate in those commodities like cobalt, vanadium, and I think there's going to be colossal demand for lithium and nickel and copper moving forward. But just don't get trapped, right? And understand the speculative cycles of this, and that a lot of it is just promotion, right? And just be careful. It's a very volatile time. So I'm looking at natural gas opportunities right now. I am looking at copper and nickel opportunities right now. To be honest with you, I don't go deep enough into the oil sector to really get aggressive there because I don't feel like I have a competitive advantage. And when I'm allocating capital, I like to feel like I have a competitive advantage. Like, I absolutely have one in the gold silver space just because of how I spend every day of my life interviewing people who are allocating cash, hosting conferences, meeting with CEOs. I know I've got more tools at my disposal than the average investor, but when it comes to the oil sector, I don't feel like I do. I am looking at uranium and have taken a few positions specifically in certain neighborhoods like the Athabasca Basin. But generally speaking, when it comes to energy, I like the steadfast, hard to replace ingredients like copper and nickel. And I think that no matter what direction this goes, those two will absolutely be an increasing demand. But there's a lot of clown show going on in this industry right now. So beware of that.
Well, that is often the case whenever politics get involved. An eventful year for Justin Trudeau over there. I know lately he's been standing up for the protesters in China, which perhaps does not need even further comment there. But
he's a man of the people, Chris. He's just looking out for the little guy.
Well, that is his motto. So, but as you said, the irony of all of this is that to go so green is going to require a heck of a lot of mining, which uses a lot of diesel fuel and other things that perhaps aren't considered so green. And again, like you mentioned, you do have the Resource Investment Conference up there in Vancouver. You're in tune with a lot of the mining companies, and anything you could share there for people? I know it's been a tough time for many investors because while the gold and silver prices were getting clobbered, it seems like the mining stocks, especially the juniors, are one of the things getting hit the most. So obviously we've had a little bit of a rebound in the prices of bullion and some rebound in some of those stocks. But anything that you could add there and perhaps touch on the financing environment and how things are looking in terms of the mining sector going forward right now.
Yeah, certainly. So, I tend to think investors should play the hand that you're dealt, right? What tools do you have access to that maybe others don't? For me, it's investor sentiment because I run a podcast, a YouTube channel, and a conference series. I'm pretty in tune with how retail sentiment is shifting and where capital's flowing. And, what I would say is that I see more reasons. First of all, I have 3 money managers on my show each week. And the purpose of that is to determine where they're allocating capital. And I work really hard to not interview gold bugs. And I do interview a lot of, gold legends essentially, but but I work harder to interview those that aren't, because a gold bug's typically always going to tell you the same thing about the price of gold. It's going up, right? If they're a newsletter writer and the brand is like the gold speculator and the business is newsletter subscriptions, they're probably not going to tell you that gold's a bad place to be, right? It's in their best interest to promote the gold industry. But if you talk to the sector agnostic investors who aren't gold bugs, who often don't own any, that's when I get curious. If, as I'm seeing now, I start to see consensus among the sector agnostic money managers on my show in a few things. And one of those things is increasing their allocation to gold. And on a money manager by money manager basis, it's a small amount of capital, but collectively it's a tsunami of wealth moving to one small asset. And I've seen this rodeo before. And so that definitely makes my eyebrows go up. And I'm saying, why are all these individuals who would confidently say, look, for most of my investment career, I've not needed or wanted to own any gold, but there's certain times in history when gold's about the only thing you want to own. And right now I'm increasing my allocation. So if I'm seeing that across the board collectively in the majority of my guests, it gets me curious, because that is money moving towards one small asset. And we know what happens when that occurs. On the retail front, we have our event end of January, and we're about 40 days away from that event. 40 days away last year, we'd sold half as many tickets as we've sold this year. So why have twice as many people bought a ticket to a mining investment conference this year versus last year, right? It's curious to me, but it tells me what retail's thinking and probably doing with their money right now. They're looking for opportunities in that sector. I don't want to be last, I want to be first. So we're more urgently looking at opportunities there. And in addition, having been in the precious metals sector for only 12 years, right? But 12 years. Balance sheets are tighter, management's better, more responsible, right? Terms are better for investors who are allocating cash. And a lot of these companies are sitting on assets, the same assets they were sitting on 2 years ago, but share prices are down 70%, right? The rocks haven't changed, right? Management's still good. And so, yeah, I would say right now I mentioned I've increased my physical holdings by double, right? For a variety of other reasons, but on the high risk side of the barbell, I am absolutely looking for more exposure to high quality development companies, early stage producers, and some exploration businesses, because I like to gamble. I just like the high risk stuff as well. And I like the speculative nature of that, even though it can be incredibly dangerous, an incredibly dangerous place to allocate capital. The returns can change your life if you can stomach the volatility and the ones that don't work out, you know. But I like it. And so, yeah, I mean, that's what I watch. And between the guests on my show and the retail sentiment and what I'm doing with my portfolio, doesn't mean 2023 is going to be a banger, but I feel like it's time to get positioned and then be patient.
Yeah, that makes a lot of sense, and I like how you point out there are the extreme highs and lows of such a field. Although something that I think would be great to get your perspective on, you mentioned you have the conference coming up where obviously you have a lot of different mining companies. And when people are going around to the different booths and just looking at different companies and all of your experience, what are some good things to be looking for when you're comparing a lot of different, whether it's gold, silver, or other resources, but within that mining space, what are some of the things that you look to as you're deciding between which one to pursue further, and perhaps also any red flags that you've learned in your experience that make you pass on something?
I focus on the people over and above everything else. And so you can go a few different directions with that. Obviously, you want to know who's steering the ship, and whoever that CEO is, that decision maker. The benefit of going to conferences is that you can meet them face to face, shake their hand, ask them questions directly, and get a sense of who the character is, right? Because in an industry where you can consistently find those 5x, those 20x returns, there's going to come with that. That's the good. There's going to be the bad and the ugly as well. And the bad and the ugly have to make up like 70% in order for the top 5% to deliver such life-changing returns. So it's a pretty colorful industry, and it really does pay to get to know the individuals that you're investing in before you let some stranger have an adventure with your cash. Like, go meet them face to face and pay attention to who they're talking to. Pay attention to who they associate themselves with. Always go a layer deeper and look at who's on the board and what's their track record. I mean, you want to know resume intently of the individual steering the ship, whoever that CEO is, but also like great people associate with other great people, right? And so always look at the board, look at the board's track record. What's the business model here? Are we looking to develop an asset and then sell it? Have we done that before as a team? Like, are there a couple of people who have done this? And I'm not opposed to betting on the rookie at all, right? A lot of the time I've been the rookie soliciting bets in my career, but when it's my cash, I think about it a bit differently. And I like to see that, this isn't the first rodeo for this team. First of all, they've done it once or twice before and they're back at the table now. So you may pay a premium for that company because they've shown the market they can deliver and do what they say they're going to do. But it's worth it, absolutely, to get access to that kind of, success begets success track record. I also look at the shareholder base and, I want to know who the major shareholders are, who's written a check, who's got confidence in this team, because there's always going to be people. I said, I've been doing this 12 years. Well, people like Rick Rule have been doing it for 50, people like Eric Sprock have been doing it for 50. And, they'll share where they're allocating cash. I want to know where the money's going. I want to look at the shareholder list and see which names I recognize, identify those that I don't, and find out what they've been up to, right? Is this a smart money deal, or is this a heavily promoted, let's get retail dollars in and see what happens, right? And so, I definitely tend to follow the money in that regard. I think that's highly, highly important, and my people-centric approach gets, people like Brent Cook, for example, brilliantly smart geologist. He'll throw shade on my approach and to be like, you're missing the importance of the geology. And I tell him I'm not, but I'm not a geologist and I got to play the hand I'm dealt, right? And my hand is people. Spend my whole life talking to people, hosting events surrounded by thousands of investors and CEOs and money managers. That's what I can crush, right, Brent? You know the rocks, so I'll ask your opinion there, right? I also want to know what deals Brent's in, but it is a people-driven business. And when you're investing in super small companies, specifically in the exploration business, you're not investing in the jurisdiction. You're rarely even investing in the geology, I would argue. You're not investing in the outlook and the commodities so much as you are investing in the judgment and decision-making of one or two individuals who are going to be controlling that company. And so whatever their plan A is, make the assumption it's going to fail. I want to know what their plan C is, right? It's a really tough business. And your plan A rarely works out. Plan B rarely works out. So what's the optionality, right? What's plan C and D? And what are you going to do if you don't find what you think you might, right? And you only get that kind of insurance policy by investing in individuals who have been beaten up in the market before, who were there before it was cool. Were they building a company in 2014? Like, were they in the industry when gold was at $1,200, or did they pivot to do something else, right? And they're back now because the market's hot again. Like, beware of stories like that, right? And, the benefit of cutting my teeth as a precious metals investor from 2011 forward was that the first 4 years of that were just a beatdown and an exodus of people from the industry, and all the colorful socks and loud ties and expensive wine vacated the sector. And anybody who stuck around was productive. And they were there because they were okay that the money wasn't easy. It wasn't easy to earn $1, right? But productive people who were dedicated to the space and understood it and had a longer time horizon and patience, they built value and they're rewarded when the market turns. So it's like, where was this individual when the market was depressed and soft and tough? And good things to know for sure.
Yeah, and I think one of the advantages within the mining sector that maybe people overlook sometimes because we're so used to the way things work with so many other large companies is that you can actually talk with these people, whether it's at the conferences or actually calling up investor relations or getting some of the management people on the phone. I found, especially with some of the junior companies and even with some of the bigger ones, that's something you actually can do. And I would suggest for people to take advantage of that. And Jay, perhaps as we wrap up here, you could just let folks know a little bit more about the conference you have coming up and also the YouTube show, but anything you could pass along there.
Yeah, certainly. Well, it's in Vancouver, British Columbia, January 29th and 30th. There we go. Yeah, tickets are at cambridgehouse.com and it's all right here. Thanks, Chris. There's a couple threads we're going to be covering at this conference. And a big one is like the political landscape in Canada, just because Canada is a country that rarely makes global headlines, but we've made a ton of them over the last couple of years, largely due to our federal leadership. And so what we're seeing right now for people who maybe aren't following the news flow coming out of this country is a bit of a coalition forming in the middle of the country between provinces like Alberta, Saskatchewan, and Manitoba. Not the provinces that international people hear about like British Columbia and Vancouver and Toronto, Ontario, but the breadbasket in the center of the country where the resources come from. And they're incredibly fed up with our federal leadership. And so they're forming a coalition on the back of legislature to increase their sovereignty and protection from the decision-making of our federal leaders. And so I've invited a couple premiers to come and speak with me live on stage, including the former premier of Saskatchewan, Brad Wall, and the former premier of British Columbia, Christy Clark, to get a sense and temperature check on how real these sovereignty acts that are being put forward from the provinces of Canada are. And then obviously we've got a whole roster of amazing investment legends, people like Robert Kiyosaki, Rich Dad, Poor Dad, Brent Johnson, obviously the founder of the dollar milkshake theory, Grant Williams, a personal favorite of mine, author of Things That Make You Go, Mark Moss, Lynette Zhang, Rick Rule, Warren Irwin, the whole list, and we really try to build a community vibe here. So if you want to talk to Rick Rule and get to know him, he wants to talk to you. And after he gets off stage, you can bend his ear for 20 minutes on the trade show floor. It really is a friendly environment. We build it as such, and it's a blast. Yeah, super fun. We'll have about 265 mining companies on the trade show floor. I think there's about 120 keynote speakers at the end of the day here, 6 stages, and it's like the Super Bowl for junior mining investment.
Well, I've enjoyed it the times I've been there, and exciting that coming up in just about a month from now. So that's January 29th and 30th. And might also add that Jay has a great show where it's listening to my old friend and intro to Austrian economics, did an interview with Peter Schiff, and you have a lot of other great guests on there that people can find at the Jay Martin Show. So Jay, appreciate you making some time to join me here and share your thoughts on everything that's going on. Perhaps not the simplest times in life yet. Good that you're out there doing what you're doing and getting people together and providing more information. And we'll have the links for the conference and your show in the description field below. And just appreciate you being here. And thanks again for all you're doing.
Thanks for having me, Chris. It was fun. I appreciate you, man.
Well, I appreciate that, Jay. Great to get his insight onto the show. Obviously, Jay has quite a unique perspective running the VRIC conference. We're involved with a lot of the mining companies and also the macro events that are going on. So hope you found that helpful at home. And as we wrap up today, did want to pass along a word from Silver Viper, who has entered into a letter of agreement with Canasil Resources to take over the Canasil projects. They did announce that they are extending the non-binding letter of interest from December 20th of 2022 to January 31st, 2023. All other terms remain unchanged. Again, that would give them access in particular to the Nora asset, which they've done previous work on. And I know Steve Cope, as he mentioned in his appearance on the show, is quite excited about. There's also the Esperanza asset, which is perhaps one of the most advanced assets in that package. And a few other projects there as well that give them some options of what to do going forward. Silver Viper is in the process of doing a private placement financing, which was one of the conditions of the deal. So you can find out more about that at silverviperminerals.com if you're interested in getting more information or participating. And to find out a little bit more about the deal with Canasil and what they are pursuing, we did catch up with Steve Cope recently where he talked about the details. And you can find out more about that in the video that's coming your way now.